Hey friends, welcome to the Singapore Market Digest for May 3rd, 2024. I'm Iggy from the Investing Iguana, and today we're diving into what's been happening on the SGX. Let's start with a quick overview of some key players on the Singapore Exchange. Today we're looking at several REITs that have recently reported their quarterly results, as well as a leadership change at one of Singapore's prominent aviation services companies. First up is CapitaLand Integrated Commercial Trust, commonly known as CICT. This is one of Singapore's largest REITs with a diverse portfolio of commercial properties, including shopping malls and office buildings. For the first quarter of fiscal year 2025, CICT reported net property income of $291.5 million, which represents a slight decline of 0.8% compared to the same period last year. Revenue also fell by the same percentage to $395.3 million. The main reason for this dip was the absence of income from 21 Collier Quay, an office building in the prime Raffles Place area that CICT sold off in November last year. If you've been following Singapore's commercial real estate market, you'll know that Raffles Place is one of the most prestigious business addresses in the city, so this was a significant property in their portfolio. Despite these results, CICT's share price remained stable, closing Thursday at $2.14. Next, let's look at Mapletree Pan-Asia Commercial Trust, or MPACT. This REIT focuses on commercial properties across Asia. MPACT's fourth quarter results showed a more pronounced decline, with distribution per unit dropping 14.8% to $0.0195, down from $0.10229 in the same quarter last year. For investors, it's worth noting that this distribution will be paid out on June 6th. MPACT's revenue decreased by 6.8% to $222.9 million, while its net property income fell by 7.4% to $169.5 million compared to the previous year. These numbers reflect some of the challenges in the commercial property sector across Asia. The market reaction was negative, with MPACT units closing 1.6% lower at $1.22 on Thursday. Shifting gears from REITs, let's talk about SATS, Singapore's leading provider of gateway services and food solutions for the aviation industry. SATS announced a significant leadership change on Thursday with the appointment of Timothy Tang as their new Chief Financial Officer designate. This move is part of SATS' planned leadership renewal and succession strategy. Tang, who is 46 years old, will initially take on this role starting May 2nd, before formally stepping into the full CFO position after SATS' upcoming annual general meeting. The current CFO, Manfred Seah, will transition to a special advisor role effective July 25th. This kind of orderly transition is often viewed positively by investors as it suggests careful succession planning. SATS shares closed 0.7% higher at $2.80 on Thursday before this announcement was made public. Rounding out our coverage today is SUNTEC Real Estate Investment Trust. SUNTEC REIT owns prime commercial properties, including the iconic SUNTEC City in Singapore. Unlike the other REITs we've discussed, SUNTEC reported positive results for its first quarter ended March 31st. Its distribution per unit increased by 3.4% to $0.163, up from $0.1511 in the same period last year. Revenue also grew by 3.4% to $113.5 million for the quarter. According to the REIT's manager, almost all properties in their portfolio showed stronger operating performance, with the only exception being 55 Curry Street in Adelaide, Australia. Distributable income rose 4.3% year-on-year to $45.9 million. For unit holders, the distribution will be paid out on May 30th, after the record date of May 5th. Despite these positive results, SUNTEC REIT units closed 0.9% lower at $1.06 on Thursday, before the results were announced. Looking at these results collectively, we're seeing mixed performance in Singapore's REIT sector. While SUNTEC REIT showed growth in both revenue and distributions, CICT experienced a slight decline due to property divestment, and MPACT saw more significant decreases across its financial metrics. These varied outcomes reflect the different property portfolios, geographic exposures, and strategic decisions of each REIT. For investors in Singapore or REITs, it's worth considering how these trusts are navigating the current commercial real estate environment. Factors like interest rates, office occupancy trends, and retail spending patterns all play important roles in REIT performance. The slight decline in CICT's numbers appears to be primarily due to a specific property sale rather than broader operational issues, while SUNTEC's growth across most properties suggests resilience in their portfolio. The leadership change at CITS is also noteworthy as the aviation services sector continues to recover from the pandemic disruptions. A smooth transition in the finance department could help position the company for its next phase of growth. That's the scoop for today. Remember to do your own research before making any investment decisions. This is Iggy from the Investing Iguana, signing off.